you're tuned into Market Fatafat on ET Now. I'm Shruti Sharma. With me is Vinny Motiwala. And viewers, this is the show where you get all the buzzing counters in trade as of now, either on the back of the news flow or on the back of the technicals. We're going to be highlighting those with our team of researchers as well as our technical expert for today. But Winnie, quite a volatile day yet again. And since the time we connected back in buy now, sell now, the markets are off those highest points.
Absolutely off the highest points, and Nifty is managing to just hold on to the 22,000 mark, still managing to hold on to the green side. Nifty mid and small cap, that's also performing in tandem with the benchmark indices as of now. So Nifty mid cap up almost 0.4%, small cap up almost 0.4% as well. So yes, Nifty remained there, nothing exciting, but quite volatile in terms of at least when you look at the benchmark indices. Top sectoral gainer today, we do have the Nifty metal that's managing to hold on to very good gains. So yes, we do have, when you look at stocks like Hindustan Zinc, Hind Copper, all of them are surely buzzing away in trade. But you know, that's the roundup that's coming in terms of the market. We have seen some new names coming up right now. Is Jupiter Wagons buzzing away in trade. And that's something we're watching out for, 12% uptick there as well. But yes, that's how we're seeing in terms of the markets, but a lot happening in terms of IPOs as well. And GoDigit will be coming out with their IPO. It's opening for subscription on 15th of May and will go on till the 17th of May. Price band is at 258 rupees to 272 rupees for GoDigit IPO. And my colleague actually managed to catch up with the chairman of GoDigit General Insurance, Kamlesh Goyal. Let's go across and listen in to what he had to say.
So we are actually primary raises of about 1125 crores, and the offer of sale is for about roughly 5.4 crore shares, and almost 100% is coming from the holding company called GoDigit Infoworks. I think, as I said, no other shareholder is really selling, barring one or two retail shareholders who were part of this journey, and no one else is selling.
No one else is sharing. And sir, the proceeds of this IPO would be utilized where? What are the plans? Because you will be getting this much amount.
So basically in insurance, like in banking, you have capital adequacy norms. In insurance, you have solvency margin. And solvency is a function of the premiums you write. So basically, for growing the business, for growing the company, one would need capital to beef up the solvency margin. Solvency margin of Digit General Insurance as of 31st December was about 160%. Minimum is 150. So the idea is, after this capital raise of 1125 crores, I think we expect the solvency to exceed 200%. So the objective of this is only to beef up the solvency margin.
So money that will be beefed up only for the solvency margin, nothing else, because
nothing else.
You've been investing on your digital infrastructure also. We are completely digital stack company. So that will also continue, or you will go into physical mode also?
No, I think if you look at, as of December 31st, our total AUM, assets under management, are 15,000 crore. So whatever money is required for investment in any technology or distribution, I think all that has been happening and will continue to happen. The purpose of this is only to beef up solvency margin and not for any management expenses or expansion plan and things like that, because all that we can already do with the cash we have.
Oh, sir, I just want to understand, because in your RHP I have read that in incremental growth you are the leader in motor insurance. It is, as compared to other companies, you have shown the highest growth and you are leading. Your focus is on motor insurance. So going ahead also you will continue to focus on motor insurance, or there are other segments also you are planning to have that same incremental growth?
So Anurag, if you look at our RHP, I think last 3 years, December 23 and the previous 2 financial years, I think our growth in non-motor business has been more than motor. We as a company don't drive ourselves to say this is the line of business we need or should have. I think we always look at opportunity as to where there is a market opportunity and we don't have a good presence, and that is how we have been driving business. Going forward also, we'll continue to write. Wherever we would see opportunity, we'll try and do business on that basis.
So presently your market share is highest in the motor. What is the percentage, and which line of business is the second one?
I think as of December 23, for 9 months, our motor overall market share should be about 6% or so. Our overall market share, again, as of December 23, if I remember correctly, is about 3.2%. But which basically means that in some lines of business, our market share is equivalent. I think if I remember offhand, in fire business, our overall market share and our market share in fire business is similar. All other lines, my sense is, other than fire and motor, our market share in each line of business would be less than our overall market share.
Okay. And sir, within your company, means what is the pie of your segment?
So motor as of December 23 for 9 months is contributing roughly about 60-61% of the business. And the rest is non-motor business. Health would be second largest, fire would be the third one.
Yes, sir. Yes, sir. My last question would be on, sir, expenses of management. We have seen that last year IRD has changed the rule for expenses of management. So how that has benefited your company particularly?
So my sense is, I think expenses of management have to be seen for each product line. So if you're writing crop business, a government health business, a group health business, you have very low overall expenses management, I would say less than 10%. For corporate business, etc., when you look at your overall expenses management would be maybe about 25%. If you look at motor, retail health, etc., your overall expenses management can be 40%. So I personally feel, this is my view, not digits, that expenses of management should actually be a reflection of the each type of line of business. Now, from a digits perspective, we had completed 5 years only, and regulator said companies which had just completed 5 years, they will get 3 more years to meet that guideline.
All right, so that was the management of Go Digit, IPO opening soon. But with this, viewers, let's move on in the show and let's connect with our technical expert for today, as well as our team of researchers. On the technical side, we have been joined by Aditya Arora, founder and Multi Asset Research Analyst at Adlytick, as well as on the research side, Gaurav as well as Ankita are joining us right now. Very good afternoon to all three of you, and let me kickstart highlighting the first counter that is indeed one of the top gainers in Nifty 50 today, and that is Pharma Major Cipla, Vinny, because the earnings are due, and we are just expecting the earnings in a short while from now. But just ahead of that, we are seeing a gain of around 2.5%. The reason being that this time around a decent set is expected, though there could be a sequential drop in the margins because the company has already guided for an FY24 margin of 24%. So do remember that back in Q3, the margins actually surpassed the street estimates as well. So on the back of that, because Q4 is a seasonally weak quarter for Cipla, the India and the US sales get impacted because of the seasonality effect, then this time the margins could shrink to 22.5%, while on the profit figure we are expecting a 924 crores in the profit. Other than that, the domestic business is expected to support with a jump of 10% YOY, while for the US business, though it could be a muted set on a sequential basis, but on a YOY basis, if you see, then there could be a 12% jump. So those are the updates from Cipla that we will be watching out for. But apart from that, the margin guidance for FY25, some of their US FDA remediation measures for some of their key plants will be the key to watch out for.
Okay, surely keeping an eye out on Cipla, earnings expected today. Let's move on. And Aditya, good afternoon. The first stock that you've picked out for us today is Endurance Tech. You know, looking at it in the last 1 year, it's managed to touch these 2000 levels, but then again after that we've seen a fall. So do you think this time around we will expect it to go past that and we can expect a good rally for Endurance Tech in the near term?
Very good afternoon. I think Endurance Tech really stands out because all the IT majors and mid-cap stocks have really tanked in this correction. We have seen significant correction. Technically, Endurance is showing good endurance, good relative strength. I think this one is a good pick in IT pack. And yes, I think this has the potential to cross levels like 2200 and 2300. So one must maintain bullish bias in this stock.
One must maintain bullish bias on this stock. That's the word coming in from Aditya on Endurance Tech. Let's move on. Talk about Surya, a small finance bank and earnings candidate. They reported their numbers. Stock managing to hold on to gain of almost 1-2%. Like you can see, NIS saw a growth of around 29%. We're seeing the PPOP. That's seen a bit of PPOPs are seen a bit of an increase there, 26% uptick YOY in terms of the PPOP, and profits have seen a sharp jump up of around 56%, 61 crores is what the net profits of the company are standing at. GNPA, yes, we're seeing an improvement in terms of the overall asset quality. So when you look at the GNPA number and NPA number, that's surely seen an improvement there. And other than that, the provisions of the company, slight increase in terms of provisions, but net asset quality of the companies and overall the asset quality is improving, and II net interest income has seen an increase as well. That's keeping the stock a buzz, up almost 1 to 2% in trade as of now.
All right, that's about Suryoday Small Finance Bank. But Gaurav, take us through the earnings as well as the con call highlights of BPCL, because the stock is up around 4% as of now.
Talking about BPCL, this stock is actually up because if you look at the numbers, those were quite strong. So starting with revenue, it was up only by 1% on a quarter-on-quarter basis. But if you look at EBITDA, that was up almost by 48% on sequential basis. Even we saw improvement of 250 basis point in EBITDA margins, and net profit increased almost by 24% on a quarter-on-quarter basis. Apart from that, company announced a a bonus share of 1:2 in a ratio of 1:1. They have also announced dividend of 21 rupees per share. So another happy thing that for the investors of BPCL. Apart from that, if you look at the commentary, the marketing actually was strong in this quarter because gross marketing margins were actually better on a sequential basis. Apart from that, the volumes were also strong. So for example, if I talk about crude throughput, that has increased almost by 5% on a sequential basis. Total marketing volumes increased by 6% on a sequential basis. And if you look at the overall performance, and if you compare it with peers like IOCL and HPCL, it actually outperformed the peers. And that is why if you look at the stock performance also, that is up almost by 4% in a day today. So definitely worth tracking a stock because this stock has outperformed its peers in Q4 at least.
Okay, surely keeping an eye out on BPCL. Ankita, the next stock that we're going to talk about is Brigade Enterprises. I don't think this is an earnings candidate, right?
It's not, Vinny. Brigade Enterprises in focus today. In fact, in the morning we did see an uptick, but then it gave up its gain immediately after that, and now it's trading with cuts of over 1%. But the news flow is that the company has signed an agreement to buy a 4.6-acre land parcel in Bengaluru with a developmental potential of 0.69 million square feet, and a gross developmental value of this project is going to be 660 crore rupees. The land parcel is located on the Old Madras Road, which is a fast-growing residential hub in Bengaluru. And on the back of this news flow, Brigade Enterprise is in focus today.
All right, that's about Brigade Enterprise. But Aditya, since all of the IT pack is under pressure, but you are picking
He's
up
picking and choosing for us those special ones, right?
Yeah, absolutely. But Coforge is the counter which is gaining around 3.5%. But that's after quite a fall on your screen as well that we have seen in the past 6 months. Tell us how the chart's looking like for Coforge as of now.
Shrishti, I've handpicked all these stocks specially for viewers of PT Now. And very few pockets look good in such current volatile times, and Coforge is one of those stocks. So yes, the bias is bullish. The stock is in oversold territory. We have seen correction from levels like 6,800 to almost 4,500. So looks pretty good in terms of risk reward because downside is limited, upside is good enough. And all these stocks which we are discussing is prior to election, because post election there could be huge volatility. We have seen almost 10-15% volatility in the past as well. So all these stocks are good before the election for a short term pop.
That's about Coforge, but on the bottom of your screen you will see the numbers popping in for Dr. Lal Path Lab. This time a good set of numbers reported in, where the revenue has seen a jump of 11% YOY. The EBITDA margin has actually jumped to 26.5%. There's an improvement of close to 300 basis points. As well, on the profit figure, we are seeing a 51% jump on a YOY basis at 86 crores. So all in all, good set of numbers, I would say, coming in from Dr. Lal Path Lab. But many these numbers are in line to the street estimates, but that's after Vijay Diagnostic reported a good set. The whole sector was on the move, and since today start, we have seen good moves on Dr.
The
Lal
momentum
Path.
seemed like picked up, and as of now holding on to 4.3% gains after a good set of numbers. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back to Market Fatafat on ET Now, and let's shift focus to one of the stocks that is roaring and it's trading at an all-time high levels, and that is Polycab India. No stopping for this particular counter, Winnie, after a good set of numbers, but actually it's not just the numbers, it's the management commentary that has taken the stock to the sky, because what the management is saying that they are targeting to hit 20,000 crore sales by FY26. The Indian cables and wire industry is projected to grow nearly 2 times of the GDP at the 2x rate, and the India real estate sector is also expected to grow to $1 trillion by 2030 from 200 billion in 2021. So across the board, they are seeing growth and growth premiumization in the lighting is also, the share is expected to grow. So let's understand that this management guidance, how are the analysts looking like at this one, and what are their reading on the numbers as well. We are being joined by Praveen Sahai, who's the research analyst with us, joining us right now. Hi Praveen, a very good afternoon, and thank you so much for joining us today on ET Now. And first of all, your first reading on Polycab numbers. Are the numbers better than your estimates? And also give us a sense on the management commentary. They're sounding really bullish, but do you believe that the targets and the kind of bullishness that they are showing is a bit realistic at this point in time?
Yeah, thank you for having me to your channel. About the Polycab, definitely the numbers is beating our as well as the street estimates on top line as well as on the bottom line. So nearly around 5% to ours, 10% to the street beat the estimates. And that's largely because of the wire and cable growth. And in that segment, company has outperformed the peers in terms of the growth. And I can say the lost sales in the last quarter, third quarter, because of some regulatory reasons, they had some benefit of that, as well as the copper prices, which has moved up in the month of March, which has also led to the improvement in the inventory filling in the channels. So those benefited them. The way forward guidance as well is quite strong from the management, and we believe with the traction in the end user industry, it's quite achievable, what I believe. And also, if I look at on the valuation side, this company, in the last, in the time of some compliance issue that's corrected, which is also with the numbers coming back. So if I look at on my numbers, it's trading at around 38-39 times FY26. There is a further room for improvement in the stock.
Further room for improvement in the stock, and obviously given that the commentary, like you were also mentioning from the management, we're expecting a good growth. But when you talk about valuations versus peer also, do you think Polycab will still hold versus the peers, whether you compare an RR Kabel, Finolex or something like a KEI Industries? Is that something where it would stand out much more than these companies?
The entire sector, wire and cable, is doing well because of infrastructure-related growth, and who has ample capacity, especially in the cable, definitely going to outperform. And so is the reason for the Polycab. Polycab has ample capacity. Some are building in the industry, but this company has already a capacity who is exploiting those capacity to capture the growth which arises from the end user industry. So growth is not a challenge, I believe. And being the largest player in the segment, and also the other verticals started delivering on the volume numbers, like FMEG, they are also in, and with the seasonality, that business is also delivering on. So I think they are, on the upper side as compared to the peers. And so as what I believe, they should command a higher multiple as compared to the peers.
Okay, and Praveen, just one more thing that what I'm reading also in the commentary is about their premiumization, how their market share in premium products, smart fans, or overall premiumization in the lighting side. That's something that's overall seen an improving trend in the industry. Do you think that is something that will be supporting more of the growth going forward for Polycab?
So I am more bullish on their wire and cable business, where they have a large portion of the cable. Like in the wire and cable, they have a 35-36% of a wire business as well, which is more to do with the housing and the real estate. And the cable is more to do with the infrastructure. These two businesses are more promising as compared to the FMEG. Definitely, you are right. The premiumization is the one thing as a sector in the FMEG portfolio is going on, whether it's fan or whether it's lighting. But that is too crowded, ruled by the different leaders. Some are the premium in nature, some are mass segments leaders. So there, it's a very small player and very small pie they hold in the market. Definitely, it will add to the financial of the Polycab, but that's not a material, I believe. More to do with a wire and cable, where the growth path is quite visible. So I think they will outperform in that segment, and so as their stock will also outperform accordingly.
Well, yes, the stock is also outperforming, and even the analysts continue to be bullish. But thank you so much, Praveen, for joining us today on ET Now and helping with your first cut as well as your analysis on Polycab numbers. With this, viewers, let's move on and let's get back to highlighting all the buzzing counters. Polycab was once a stock, but another stock that is in focus today, and that is UPL, because once again the stock is inching higher, and the last time I checked was holding on to the gains of 3%. And Aditya, this is the stock that you are picking up on the technicals as well. Tell us more. How are you looking at the numbers? How are you looking at it on the charts right now?
Yeah, so UPL looks pretty good on the charts, and we have seen chemical sector coming out of that oversold zone. The recovery started with Aarti Industry, then followed by SRF, and now UPL is the last one in that pack, which has started to show positive sign, green shoots, and I think it looks good at the current market price of 487.10. There's scope to inch towards levels like 500 and 520, and I would maintain stop loss at 465.
Okay, keep an eye on the levels over there for UPL. But with that, we're just going to slip into a very short break. Don't go anywhere. We'll be back with more of those buzzing stocks after the break.
If you like this video, then like, share and subscribe to ET Now.